Hi everybody, Alex Employer from Expert Forex. We might as well start the webinar. I see there's still some people flowing into the room. This seems to be a very popular time of day for most people to attend webinars, so we must probably gravitate to this type of time of day when we do the bookings for May. And it's been quite an exciting time. If you attended the last webinar, there was just nothing happening, and just looking at this RSI table that was here last time, and I wish I had taken a photo of it or a picture of it. These two columns were all gray or white, as now they look like a Christmas tree. So the whole market has changed dramatically, and that's the whole nature of Forex trading. The one day there's nothing, and the next minute there is everything. So there's a lot to see here. There's the pound is losing quite a bit of strength there, and the New Zealand also losing quite a lot of strength, and the yen seems to be picking up quite a lot of those losses over there. You can see it's going quite crazy at the moment. And now, as always, if you do have any questions, comment. Oops. Again, I didn't share my screen, so I'll go and share that with you. And nobody wide awake there in the room. Okay, there we are. Let's start again. Okay, so this RSI table yesterday was completely blank, completely white. And today it is, as I say, like a Christmas tree. It's just all over the show. And there's some extreme readings going on there. And we'll go and have a look at why those readings have happened. As I was saying, the yen is picking up most of the gains at the moment, with the New Zealand losing and the pound losing quite a lot of strength. So, so if you had to look at, for instance, the pound yen, you should see a huge trend. In fact, we'll go and see it. And that's the kind of thing that you should be able to tell from here, which are the trending the strongly trending currencies and the weakly trending currencies. You can also see that from the currency strength. Okay, I see there's no questions or comments coming in, and we'll just move on to the next item for discussion now. What happened yesterday, there was nothing much happening. And the reason for that is the market was consolidating. And you can see all these blue dots that you can see there were where the moving average had consolidated to a point where sometimes they go into one color. You can't actually distinguish the color of the various moving averages. Now, that's really the point at which of consolidation that's actually very interesting, because what happens from there is that once that point is resolved, you normally get a very strong breakout. And you can see here on the pound yen there, the knot, I call them knots, the knot happened there, and there's that big breakout out of the knot. And what we said is the thing to do is let the market decide where it wants to go. So what you do is you just straddle the knots, and that's a sort of well-known strategy for multiple moving average trading, and you could have done that with all of these knots that appeared. They all appeared at the same time, and that was the strategy for yesterday. So it actually did work out. You can see some dramatic breakouts that have happened. Some are still happening, so those are still opportunities, but certainly there's an indication of a trend happening. Okay, let's see. Any questions on what we've done so far? Does everybody know how I got those blue dots, those blue shapes? Sorry, I haven't checked if the sound. Can you guys hear me? I haven't checked. I'll normally ask right in the beginning, but it doesn't sound like anybody can hear me. Okay, all right. Thank you. That's good. All right. Thank you very much. Okay, so everybody knows how to make those green, those blue dots over there. You don't understand the one for the Oz. Here's the Oz. Right, let's make it a bit bigger. Yeah, that's not quite one. There's only one line that's out, but so that's good enough to qualify. You'll see it doesn't happen that often, so that's pretty good. That's as good as it gets for the Oz. So that's close enough. The actual dot is there in that particular area. If I reduce it, let's see if I can reduce it down to a more meaningful place. That's where the if you want to be pedantic, the thing with the moving averages is to give you an impression. There's not, you know, you're looking for absolute precision, which is actually a big danger in Forex trading. If you're looking for absolute perfection, just be careful, because this is a wild market. It doesn't like perfection at all. And you know, I think people that try for perfection have a problem. But okay, there we go. So I hope that clarifies it a little bit. So if you're on a narrow, put it down to, you know, that's more or less where the dot is. Okay, so okay, now you can virtually not see that dot there, but they're not always perfect. But in relative terms, you see, like, that's not one, that's not one. In relative terms, you can see the consolidation. And I think that's the thing to look for. It's not so much the perfection of one color, it's the consolidation that you must be looking at. Okay, so there we go. No comments on the on anything else? Okay, yes. All right, so straddling those knots or consolidations is a good idea. It does result in a jump. I've got a quiet bunch in the room today. No questions or anything like that. Okay. Is there anything in particular anybody would like to look at? I'm going to basically end the webinar at this stage. Anything in particular anybody wants to look at? How far would you recommend a straddle? You'd have to look at the actual chart in a lot more detail. Thank you for that question. Let's have a look at this one. And what you do is you drill down into the actual, now this is down to the 1 hour. So you have to look at the volatility around that time. And, you know, just judging from what I can see here, then you go by eye. So you don't go by pips. You look at the chart and you go by what the chart is telling you. So don't look for formulas in pips. You say, what is the price action that's happening there? There's the one price action and there's the other. So that's a straddle. Okay, so let's have a look. I've got no idea how many pips that is, so let's just have a look. So that's 20 pips and roughly 20 pips. So that's a 20 pip straddle. Also, the straddle needn't be parallel lines. They can be triangles and all kinds of other things. Targets for a straddle when the fast moving average and the slow moving average cross over again, that's a good way of exiting a straddle, a consolidation breakout. So in other words, at the moment they're far apart, you just stay in the deal. It's going to trend forever, this one. Targets, stop loss. What kind of stop loss would you think you should have? Somebody's asked what kind of stop loss. I don't like giving just straight answers. Rather say, what do you think of a stop loss of this, or what about placing a stop loss at the last high or something like that, you know, so I can get an idea that you've actually thought about it. If I say to you, I'm going to use a 20 pip stop loss, you haven't learned anything. All right, well, one place you can put a stop loss, you just put it where you would put the entry. So the entry and the stop loss is at the same place, and the entry and the stop loss is at the same place. That's the most common way of doing it. So you literally entry and exit, entry and exit. That's one way of doing it. Oh, there's a whole lot of other ways, but you need to use your own judgment in those particular circumstances. Each bit of circumstance is different. Also, these things can whipsaw. In this case, they haven't, but they can whipsaw quite dramatically sometimes. So you need to. But the risk reward ratio is so high that you can even be stopped out in a whipsaw and still make quite a bit of money on a straddle. So you keep the other side of the straddle open because it will come back and take you. But in this case, you can see all of them were clean breaks out of the straddle. So you can use the entry of the one and the exit of the as the stop for the other. Okay, okay, I think that's most probably it. Liz, I've had a look at your troubles on the forum. Can't duplicate them at all. Don't know what you're doing, but you must you must clear your cookies. You must clear your Liz is having troubles not seeing things on the forum. I've checked it out and everything's fine. So normally that kind of thing happens when your computer gets a bit full, your memory is a bit full. Okay, so let's have a look at anything else. All right, so let's have a look at deals for today. The RSI is giving some magnificent deals today, so let's have a look at them. All right, there we are. The Oz, beautiful, a 50-line breakover, two nice humps, great trade there. Worth looking at. And the other thing is on the Aussie yen, exactly. Oh well, I won't even draw the line. I just want to show you how exactly the same these charts are. They virtually look the same. Look at that. Now, just out of interest, which one would you trade? They're identical, virtually identical. These charts, the Aussie USD and the Aussie yen are almost identical. Which ones would you trade? If you had to enter a deal, which one would you trade? Right, so there's quite a few here. The pound is also exactly the same, two humps, trend line violation on the 50 line, really strong signal. It looks like it might be late, but I tell you what, this is how trends start. Well, yeah, I think that's a good answer, Ron. You trade the one with the lowest spread, or you trade the one with the lowest spread to volatility ratio. Yeah, you can see the Aussie yen has bigger volatility, than the Aussie, but the Aussie has a lower spread. So you'd have to balance those two figures, those facts together. You also need to look at things like the actual targets and things like that that might play a role. For instance, in the Oz, let's just see, the target would must probably be at that just before that low, and let's have a look at the target over here. Would must probably also be just on that low there. So so what we're saying is that the potential here is 230 pips, and the potential there is, oops, don't want that. Let's say 80 pips. So 280 pips here, 200, I can't remember now, 30, 200 and was it roughly 30, I think it was. No, it's roughly 200 and 280. So that's the other thing that you could look at is what is the potential of this trade. The Aussie is giving you 280, the Aussie yen is giving you 200. That's another way of deciding which. Look, the swap. If you're worrying about the cost of a swap in a transaction like this, then you are being there's an illusion taking place. You can't compare the profitability of a 280 pip run with the profitability of a 200 pip run, and you worrying about the swap. Sorry, you know, you need to really get your priorities right. What matters in forex trading and what doesn't. Swap is okay if you're going to stay in this deal for a few days, but it's likely that this deal will most probably be over in about 2 or 3 days. Okay, let's have a look. We have a lot of. Yes, the other thing to do, you look at your other trades, and if you've already got exposure to the Oz, selling the Oz in other trades, or buying the that would be selling the Oz and buying the USD. So if you're buying the USD in other trades, then you need to keep a balance on your portfolio, your risk, but you can't be buying the USD too much. It will throw your portfolio out of balance. A good point there. That's a great point. Okay, so let's have a look. Thanks for that. Okay, so we've identified those two. We've identified the pound. The pound yen is also on its way. Same one. The pound yen has got a slight divergence, which maybe makes it even a stronger signal, like divergences. So there is a divergence there. The other one that's hiding away is the Euro Oz. That is a very, very misleading currency. You know, if you had a look at that candle over there, take a guess at how big that candle is. That candle we're looking at right now, the one that's the current candle. Take a guess how big it is. And I'll just. There we are. Doesn't look like much. All right, so let's have a look. I'm going to very rough measurement here. That's 100. It's 180, almost 190 pips. That candle. So the Euro Oz is a very deceiving currency. You know, you look at its candles and they look tiny, but they 200 pip candles. And the other thing is they one candle. So you have lots of 200 pip movements there. I mean, there's a 300 pip, 300 pip, 300 pip, 200 pip, 200. So it is, if you can get the if you can master the Euro Oz, you can do pretty well there, and that's quite a nice signal that's happening right there. The way to trade it is actually to look at it on a multi-time frame basis. So it's let's see. These charts are most probably not up to date, or they're messy. I'll just clean them up. Okay, so here we are. Remember what we said about knots. Here we are. We're almost knotting there, so we can expect a volatile breakout out of that knot. So that's encouraging. This kind of trend can continue for a very long. It's already run 140, and normally you would say, "Oh no, that's far enough." But my experience with this particular currency is that it has a lot of go to it. So let's have a look at. It's a bit of a messy chart. This. You see that looks very sideways. So you could look at this in various ways. You could say there's a channel, and let's just increase the size, make it clearer. You could look at it like this and say, okay, there's a channel. When it gets there, I'm going to sell it. So that's one way you could look at it. And looking at the RSI, it definitely looks like that. There's the low RSI, high there. Everything seems ready for a sell there. So the other way to trade this is to just go for that approach. You do a sell there. All right. So just looking at what is confirming the sell. Okay. So if you need a confirmation for that sell, here's a divergence, strong divergence here on the daily. It's already, if you look at the beat of this one, it's 340, 260. So it's getting close to its beat. So that's another reason why it could sell at the top there. That's in a majority is a sell direction. This one, however, you see your conflict is here. You're getting your buy signal, so it's a bit of you've got to make your mind up. Are you going to go for a potential sell here, or are you going to go for the breakout out of the channel? This consolidation tells me that there's big volatility coming. That's what that tells me. Big volatility coming. So, well, interesting one. Yeah, a beat or a vibration rate, that type of thing. It's a heartbeat. It's the market sort of beats, and then it goes for a jog. All right, so that was the daily charts. Let's have a look. Anybody else see anything on the daily charts there? Oh, there's a double bottom on the Euro Oz. Didn't see that one. Let's go back to it. There's the double bottom. Okay, well spotted. That's pretty good. The point is, what kind of target do you look at for a double bottom? So traditionally, the height of the double bottom is the target. So we actually saying it might have reached the target. You know, that's just a guide that was used in the past, but and it works for head and shoulders and all kinds of other the height of the formation is a good guide for a target. So it'll be quite interesting to see this tomorrow, to see if it actually broke through out of that triangle, but that channel. But certainly, this is starting to tell that it will break out. The breakout is, momentum is stronger than the bounce momentum. Just one concept that you might want to think about in terms of a price movement is that imagine the price is in space and it's got rockets on it's got buy rockets and sell rockets. Now, if it wants to go somewhere, it doesn't have to fire these buy rockets all the time. It just has to give it a boost, and the price will just move in space and keep on going like that, up like that. Now, that's natural momentum, and if left alone, it will just continue and continue and continue, just like it does in space. So that's one of the concepts of price action. Now, to change that direction is amazing. You need amazing rockets. Not only do you need the rocket to stop the movement going up, but you also need a rocket to change the direction. So if you're in space and it's moving up nicely, the rocket that it takes to move it down is an incredibly strong rocket. And that's a good way of thinking about price action, is you need double the amount to change the direction. Firstly, to stop it, you need an amount, and then to change direction, you need amount. So you need to evaluate price action that way. And where does these double amounts come from? The double amounts comes from the opening of the US market and the European market. Those markets have got the double VUMA that will change. Now, we're heading for the US market open pretty soon, and that has a possibility of changing that direction. So you always have to be aware of the time that you're also in. Those are the ones that where the volume can come in and change the direction. But that concept of space is a very important one that you've got to remember, because you can trade volume in Forex. So what you do is you say, oh, low volume, and then suddenly you see high volume coming in, then you know that's the time that it will reverse. And it comes down like that, and then you see huge amounts of volume, and then that's the time it will reverse. So I used to trade that as a trading technique. People used to say, oh, you can't trade volume. Certainly works. Okay, let's have a look. Sorry, I'm trying to battle. Now suddenly there's so many comments I can't read them all. Straddle the Euro Oz. Yes, you could do that on the on this one. It's not quite a knot. You see how deceiving a chart can be. It's not actually a knot yet. So you need to must probably evaluate that a little bit more. If we went down to the 4 hour, you'd even see that the knot has already happened. Could have happened. There's the knot there, but yeah, it looks like it's already happened. So you also have to fool around a bit with the time frames. Yeah, I mean, this actually looks like it could bounce. Let's see what the US market does to it. All right, so we've basically said that the daily is showing quite a few nice trades, and let's go and look at it again. We've got the Oz yen, the pound, and we've got the Aussie Euro Oz for a buy. That's actually a buy signal. We've got the pound yen for a sell. And that's it. Okay, so let's go and have a look at the 4 hour. Now, these aren't my normal charts, so that's why they're slightly out of kilter. All right, so here again on the Oz, you see the support line there, and it's battling to break through that support line. If it does, it will probably be a good sell, but it's battling a bit. There's some good breakouts that have already happened, so we can't do much about chasing those. And there's the pound that's already broken out. So what you need to do is you say, all right, on the 4 hour, it's too late, but let's have a look at the daily, and then you must decide whether this is a good daily trade, because it is still a good daily trade, but this breakout has already run 140 pips. And let's see if there's anything else here. Nothing else. There's a bit. This one's messy. I'll tell you why, because it hasn't touched the overbought environment for a long time. So until it touches the overbought, it's technically still in a sell phase. All right, so that's about it for the evening. Look, thanks very much for all these questions that come in. I've looked at the daily and the 4 hour chart. We no need to go down to the 1 hour when those signals are already quite obvious. You can see some really big runs here on the pound, and that's also the pound causing that run. And let's see, the CAD also had a bit of a run there. I don't know how much that is. 130 pips. So there are a few things. But if you are stuck for deals, don't worry about going down to the one hour chart and looking at those particular charts. They are pretty handy for catching good deals too. As you can see, there's a few hundred pip runs that have happened here. Yes, so that's actually a very good observation. So the observation here is that the US Open, how is that going to affect the euro and the Oz? And it's a good one, because it's obviously not part of the USD family. So why would one worry about trading the euro Oz in the US market? So let's just have a look at that. Let's explore that. Thank you for that question. We can sort of look at a few things here. I'll grab. Mataf is great for answering those kind of things. I'll just grab Mataf and get that on the screen. And then, so we're looking at three currencies. We're looking at let's look straight at the volatility. Let's look straight at the Euro Oz and see what profile it has. Euro Oz. There we go. Okay, so Tuesdays, traditionally low volume days. Its volatility is higher than ever before. These are the last 5 years. So this is a 5-year chart of volatility. The Euro Oz has never been that high. And we're now saying, why trade the Euro Oz in the US market? So here's your answer. It has the highest volatility in the US market. So it's always good to come and have a look at this particular, these particular charts on Mataf. They really do answer the question, you know, the question that you've just asked: why trade the Euro Oz in the US market? And there we are. So it has 3 peaks. It has a peak in the Asian market because of the Oz. It has a peak in the European market because of the euro, and it has a peak in the US market, because the US market is just the biggest market, it is because there's an overlap between the UK market and the US market at that point, and you get this turbo boost there. Does that answer your question, Bernard? All right, so let's have a look at the Euro USD on its own. So you've got to, now you can see that the profile here was completely different to the Euro Oz. It's got high volatility, but not as high as the Euro Oz. And look at the peaks here. So in the Asian market, it doesn't really have a peak. It's got a peak in the UK opening, and it is a peak in the US market opening. So again, although this, you think the euro would be bigger there, it's still got the peak in the same place. And then let's look at the Oz. Now, again, the Oz is very similar. It's got 3 peaks: Asian market, European market, and then the US market. But the US market, again, is the king. So that's got a 3-peak situation. Now, if you look at something like the CAD, it's a US CAD, so must be right at the bottom. You should imagine that only has 1 peak. So let's have a look. So if you're going to trade the US CAD, it's actually not bad. So it's quite a peak, but it does have a little peak there and a little peak in the Asian market. So it's not as severe as I thought it would be. Okay, so thank you very much for those questions, and I think we had a bit of a discussion here at the MATF. These MATF charts are actually extremely valuable for day trading. You need to you need to target which currencies you want to trade in at which times of day. I just want to have a look at one more, which is the pound yen. That is an amazing currency to trade. It has produced the best results on the double in a day and a few other currencies that do pretty well. And as you can see, it's the pound yen, again, nothing to do with the US dollar, and it's got this peak here. But you can also see that it's actually quite a balanced currency, because it's got a high in the Asian, high in the euro, and then high. It hasn't got the deviation of the other ones. The pound yen has been the most stable currency to trade over the years, and you can also see that it sort of is quite balanced in its volatility. It hasn't gone extreme right like the rest have, and it hasn't gone as low as the rest have. So it is a fairly a stable, a nice currency to trade. Okay, so thanks again for all those questions. Thanks for that. They were pretty interesting. We looked at various aspects of those trades. And from me, Alex Deploy, cheerio.